Over the past few years, there have been a few key stocks that have gone up thousands of percent and made investors very rich. Today's topic is one of them. It's Shopify stock, which is a Canadian e-commerce giant that we've actually talked about before here on the channel. Welcome in. My name is Liam. This is Golden Arch Investing. We talk all about investing in Canada here every week. If that's up your alley, leave a like and subscribe to the channel. So, what exactly has made Shopify so special? Well, first off, let's talk about who they are. And if you're one of the very few people that don't know this company, think of them as an e-commerce giant. They are the number one name in helping people start their own small businesses and get them online. That is really the bread and butter of what they do. But the cool thing is that's not all they do. As we've talked about before, they scale with their customers. They're able to take on these big businesses like Victoria's Secret and offer them commerce solutions. And they've been making a focus of not just being an online option, but helping commerce in general. They've done a lot of really cool things, and their investors have really been rewarded for it. The last time we talked about this company, I recommended that this stock was probably a good buy for most people. And I personally bought into this stock. Since then, it's up $40 a share, an incredible amount. And most of that came just last week when Shopify announced their Q3 earnings. And suffice to say, these earnings blew expectations out of the water. Hence the massive jump up in the stock price that I'll show you on the screen here. I mean, just look at that. Clearly, they destroyed what analysts were expecting from them, and investors got a really nice return. So, I have two things that I want to talk about. First up, why? What made it so special? What is it that Shopify is doing that's causing them to run up again? And second, is it too late to buy now? Let's dive into these topics. So first, in order, what exactly did Shopify do that made them so special, that made investors so much money this last earnings? Let's dive into some numbers here to understand really what they did. One of the most important numbers, and one of the things that blew me away when I looked at this company, was their 10-year revenue compound annual growth. So the amount they've grown year on year and year on year. Over the last 10 years, if you compound it out, it's at 64%. That's an insane number. And yes, the last couple of years haven't been quite as magical as that number might indicate, but they've done some other things really well. Specifically, they've been increasing their profitability. Now, how are they doing this, and why does this matter so much to investors? First off, this is an e-commerce giant. Anybody who's been watching the e-commerce space over the last couple of years know that there's usually a big ramp phase, like what happened with Amazon, where these companies just try to acquire as many different merchants and customers as possible. And usually they lose money. Most famously, Amazon lost money for a long time. And then once that phase comes to an end, they begin to make profit off of that business. Well, it looks like Shopify is stepping into the really profitable part of their company's growth phase. And how have they done this? Well, there's a couple things that stand out to me, and I'm sure you've probably heard this before. First off, subscription numbers. Everybody hates subscriptions. I understand that. As a consumer, everything seems to be a subscription nowadays. As an investor, that's some of the best money a company can possibly make. It's recurring, it's consistent, and it might cost your business nothing, depending on what exactly the person paying the subscription needs from you. That's an awesome number. Just over the last little while, subscriptions are up an incredible amount. Over the last few quarters, we've been seeing 20 to 30% range moves up and up and up in those subscription numbers. And investors are paying attention because that's an incredible growth indicator. It shows that this company is able to bring in this recurring revenue constantly, that as long as they continue providing the same great service that they already do, should just compound as more and more people sign up to the service. The other thing they've done really well is increasing their profitability. This last quarter, we had a massive jump in profitability that came alongside a huge jump in revenues. Like I said, the usual trend for an e-commerce giant is they grow the company, and then once they've grown it, now they grow the profitability. But the thing here is Shopify is not slowing down. Their revenue numbers are increasingly going up. at a faster and faster rate, and they're adding profitability. So investors are salivating at the opportunity to buy this. And the more money they make, the more investors are salivating, the more big funds are buying into this thing. You're going to see a snowballing effect. Once a stock becomes a brand name like this, and I'm not talking about the company, I mean the stock becomes a brand name, it has this added level of confidence from investors. It has an added level of institutional ownership, and all of these things push the stock price up. So, as a retail investor, a normal person who's learning about investing, who's investing my own money that I make at my actual day job, is it too late? Like I said, when I was buying this company just a few months ago and talking about it here, I was paying 70 something dollars a share. Today, the asking price is almost $110 a share, which really does make me wish I had just put all my money into the stock back then. Now, I didn't do that for lots of very smart reasons, but still, there's a huge increase in price. And the fear for me and for lots of investors is that I missed the boat, that this huge run up happened and that I only had a few shares. And so I'm going to miss out on these massive profits and all these people that are taking money off the table that they've invested over the years and sort of enjoying it. And that I'm going to be stuck holding the bag as this thing stops growing and sputters out like it did back in 2021. Well, there's a couple things I think are very different than it was in 2021. And I think that maybe, just maybe, this could be the start of the bull run for Shopify, not the end. So let's compare this run up to the last run up that sort of peaked in that pandemic stimulus driven era of frenzy back in 2021. Lots of investors on here talk about that era and talk about just how crazy it was. And a lot of good investors on this channel, on this platform, everywhere, talk about how it was really an era of hype and mistakes, to be honest. And I'm not immune to them. I'm a young investor. I had money in all sorts of hype stocks in 2021. The thing was that as we came out of the pandemic and people had all this extra money and they had all of this cheap credit and they could just buy, that money eventually ran out. Inflation ran up and we all saw what happened next. It's been a couple tough years for most consumers. And so lots of companies that benefited from this huge sort of stimulus driven era crashed. And Shopify was not exempt. Shopify crashed hard from that 2021 peak. I think things are different this time though. Let's just look at the average consumer. If you compare where they were at in 2021 to where they're at the end of 2024, they have less money. Their debt is much more expensive. There is a higher likelihood that their wages haven't kept up with the pace of inflation, so they can afford less just in general. And we're talking groceries, we're talking insurance, we're talking housing, like all these sort of necessary costs. And so buying things from online brands is probably not high up their list right now. And yet we're seeing incredible growth. So what's going to happen if not the same levels of money, but an increase in money starts flowing from the consumer to these companies? When inflation has been defeated, wages have caught up, interest rates have dropped, that could be an incredible time to be a Shopify, where your merchants, all of these companies selling all of these things, all of a sudden have an increased demand from all of these consumers with extra money. That could happen, but it's not 100%. What if we have another recession? What if we have a major war? I think Shopify is probably okay either way. I think the key here is that a lot of their revenue is coming from the service they're providing to merchants, not necessarily from the business those merchants are doing on the platform. Now, of course, an e-commerce brand, they do benefit a lot from an increase in business on the platform. But if they're making a huge amount of profitable, high margin money from merchants, and those merchants are able to continue to work through whatever environments are coming in the future with the help of Shopify, they're probably going to be good. And even if this is the end of a massive rapid growth phase, I mean, just look at an Amazon stock. What happens when they just turn on that profitability? If Amazon achieved profitability back in 2018 or 2020, in that sort of era, I mean, you would still be making huge money investing in that company. So, do I think Shopify is still a buy? Yeah. Do I think you need to buy it right now? Maybe not. I'm going to continue dollar cost averaging. And this is probably the most boring strategy people talk about on the internet here. But I am going to slowly make purchases over time so that I can find an average price over my period of time. Do I know that period of time off the top of my head? No. I'm not certain how long and how much money I'm going to invest in this. But I do know that I want to take it slow, keep making purchases, keep watching my gains from the shares I already own go up, and build a strong position. Because if things do go bad in the next little while, and as a Canadian in the Canadian economy, things look like they're not going great. Now, the overall US economy looks pretty fantastic, so Shopify should be okay. But if things do go bad, well, as the price drops, I can buy more and I can build a bigger position with less money. And that's actually a good thing for me. The price rockets. Well, good thing I own a couple shares, and good thing I made those first few buys as the price was in this range. If this stock hits $1,000, buying it 100, 200, 300, does it matter? You're still making huge returns. That's kind of my mindset when I look at a company like this. I've seen lots of other people that have a similar mindset talking about this stock. It looks like, all things being equal, this stock is set up for a nice multi-year run. But that's just my opinion. If you made it this far in the video, you probably like this kind of content. Like I said at the start, we talk about this stuff every week, investing in Canada, and I would really appreciate it if you would like, subscribe to the video, and I would love to hear your opinions. Again, I am a retail investor. I am somebody who's just learning and building my portfolio and sharing sort of that journey along the way. If you think I'm missing something, let me know, because I'd love to hear about it. I would rather hear people telling me, hey, you're on the wrong path versus continuing to make bad investments. But I really do think this is a great one. All right, that's all I have for you guys today. Hope I see you in the next one.